please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, it's been a wobbly start to the Friday morning, but in fact, we have recovered from the low point of the day. The Nifty is trading in the green. The Nifty Bank as well is trading in the green. Hello and welcome to Chartbusters. I'm Nigel D'Souza, and with me is Mangalam Malu. Well, Mangalam, the Nifty is a little tipsy in the morning, it seems. We started off well in the red, then we've recovered from the low point of the day. But what really stands out is the advanced decline ratio. We started with more number of stocks that were declining in comparison to the number that were advancing. But it's Friday, they kissed each other, and in fact now we have more number of stocks that are advancing than declining.
They kissed each other not just once, Nigel. I can see around 5, 6 of them.
Making out.
They're locked in an embrace. But a couple of stocks that are moving higher. L&T, the big boy, that one's at the high point of the day. We're virtually closer to the high point of today's trading session, 10,850. L&T has moved higher. IOC2 has moved higher. ICICI Bank saw delivery buying of close to around 600 crores or thereabouts. ICICI Bank too has moved to the high point of the day. But to tell us more about the markets, in fact, the mid-cap index now is gaining some strength, almost 100 points as we speak. A lot of the stocks which are moving in trade include the likes of Biocon. That one should come up for you at the high point of the day. If you take a look at all the other stocks as well, they are moving. Let's get in some more from Ashwani. Ashwani, what would you do on a choppy day like this? We are in the green, would have made money at the long end. Do you think there is more room to go going forward?
See, what's interesting is that yesterday you had a news which made the markets gap up, and then they declined by the end of the day. Today morning, they are almost back to yesterday's high. So that to me means that at higher levels, there wasn't enough selling to take this market much lower. In fact, the buying on the decline is much greater. So that way, these little dips that you are getting should be bought into. And the other thing is that in case yesterday's high gets crossed, maybe on the Bank Nifty, etc., then, you will see the rally of your life. Why? Because yesterday the people who went short, they got above yesterday's high, and, fresh buying comes in. And you'll see momentum right up to 27,000 on the Bank Nifty. So these little 20-30 point dips, in my opinion, give you opportunities to buy, because, all banks are in the green. Had it been like 3 banks in the green, rest in the red, it would be different. But even without news, if there is this sort of strong buying, you will see follow through. As far as stock calls right now are concerned, Capital first, after that large decline post the news is showing some upside. That is a buy with a stop of 765, target of 790. Sonata Software is a buy with a stop of 298, target of 315. And Lupin is a sell with a stop of 925, target of 870.
All right, Ashwani, thanks a lot for that. Talking about getting tipsy, just take a look at Radico Khaitan. That one's moved to the high point of the day. But one stock that is buzzing today is Cyient on the back of a good set of numbers. The margins and revenue came in above expectations, led higher by the services business in what was actually a seasonally weak quarter. Ajay Agarwal, the CFO of the company, now joins in to discuss their third quarter performance. Ajay, congratulations. It was a good set of numbers. The street really likes it. Stock up about 5.5%. But going forward, what can you tell us? We take a look at your segments. Design segment, we saw a decline because of one of the orders that was pushed into the next quarter. What's the outlook for that? What was the quantum of that order? And what can we expect in the next quarter?
Thank you very much. Yes, we definitely had good set of results in the quarter, and this is not any one-off performance. I think we had a robust performance so far in the first 3 quarters, and for the full year we will have a best performance, top line, bottom line, I think operating profit, cash generation, all around. Coming back to, I think your question is more about when you say design, is about design-led manufacturing, which is about 10% of our business. So we did have some kind of revenue of about $3 or $4 million, which got pushed out to the next quarter. But we expect there that, both in terms of quarter 4 catching up some of the deficit of quarter 3 and the full year guidance on DLM, we will be on track. We will see a robust growth of about 20% on like-to-like basis, excluding of excise in DLM business. So that business is also picking up.
All right, Mr. Agarwal, if you could help us out, sir. We have that the unit Raxons that you had acquired, I think, a few years ago. You had given us a guidance earlier that you were expecting to do very, very roughly, I think around $62 million. So you're on course to do that for this year itself, because quarter 3 has been a bit of a down leg and a bit of a degrowth is what you've seen there.
Correct. So I think whatever comments I made about design-led manufacturing, that Rangson's unit, it was the name of the company that we acquired. Now we call it design-led manufacturing. So we are absolutely on track to get that guidance that we had given at the beginning of the year. Yes.
Okay, and finally, before we let you go, Mr. Agarwal, you had earlier given a guidance for the full year revenue and net profit growth of double digits. First 9 months, you've done 7%. Do you think for FY18 double digits is on course? And FY19 as well, can we expect double-digit revenue growth between FY19 to FY20? That's what a lot of the analysts are expecting.
Absolutely. I think if you look at our full year growth, both in services as well as design-led manufacturing, it is double-digit growth. Operating profit is at double-digit growth, and obviously the earnings growth is in double-digit. We are absolutely on track. We'll have a very robust year.
All right, Mr. Agarwal, what about the margin performance? I remember in FY15, at that point of time, you took a knock of around 300 to 400 basis points because of pricing pressure. Now you have stabilized at around that 14-odd%, 13.5%, 14% odd. You expect to hold on to these margins? And if you could give us a sense about the order intake as well, has that picked up?
See, first on the margins, I would say that, if you look at our margin for the quarter as well as for the year, I think it's absolutely on track. For the services business, we are almost at, when you compare 2015, I think we were only a services business, and our margin currently for that services business is around 16%. Despite the pricing pressures, I think we have really done a lot of work, the way we have organized ourselves into profit centers, the focus on operational parameters. So I think services margin, we will have exit of about 16%, which is very nice. I think some of the margin gets taken away by the manufacturing business, which is 10% and which is stabilizing, and now it is at break even. So that takes away about 1%. So we are looking at about 15% kind of a margin, and in long run, obviously, we are looking at improving it further as our manufacturing business stabilizes and the new strategy comes into play. As far as order intake is concerned, you would see that we have one of the highest order intakes in this particular quarter. There have been extremely good set of wins in the quarter. The pipeline and backlog gives us a lot of confidence for quarter 4 as well as the coming year to be, like to the current year or better than the current year.
All right, Mr. Agarwal, thanks so much, sir, for stopping by and giving us those details. Double-digit revenue growth is what you're guiding us for. In fact, margins closer towards 15%. The street will like that. The stock is rewarding you. We're up close to around 4.5% as we speak. But the other big buzzer today is Biocon. It's in focus as it announces the global collaboration with Sandoz on biosimilars. To discuss this and more, we're joined on the phone line by Ms. Kiran Majumdar-Shaw. Thanks, ma'am, for joining in today. If you could give us a sense and you could give us some details in terms of this tie-up that you've announced with Sandoz.
Well, basically, this is a partnership that we've announced, which is really about both partners developing a select number of assets, from end to end. And basically, this allows both, at least it allows Biocon to start front-ending some of the activities, such as, getting the market authorization in their name. We also have a commercialization split where, Sandoz basically is responsible for commercialization in the US and European markets. Biocon has the rest of the world markets, including developed markets like Japan and ANZ, Australia, New Zealand. So I think, this is a very good partnership. It's about, the partners basically sharing the development costs and the profits equally.
Right, fair point there, Ms. Shaw. But what does this tie-up mean when it comes to your relationship with Mylan and biosimilars itself?
Well, we have an excellent relationship with Mylan, and the Mylan partnership is developing a number of biosimilar assets, and that will continue, and we even hope we can even expand on that partnership, just like we hope that we will be able to start and then expand even the Sandoz partnership.
Well, the obvious question is, why didn't Biocon extend the relationship with Mylan? Your comments, ma'am, on that.
I think these are mutually exclusive relationships. And, if you remember, Mylan also has partnered with Momenta for a certain number of biosimilar assets. And, obviously, we are also developing some assets with Sandoz. So I don't think you should read more anything into it, because I think the biosimilars opportunity is like the generics opportunity in the years ahead. And I think, in terms of how you develop these assets, you could possibly have several partners. And right now, Biocon has engaged with both Mylan and now Sandoz.
Okay, so the tie-up that you're talking about with Sandoz, is it limited to future biosimilars or marketing of those in the pipeline as well, the likes of trastuzumab, etc.?
Our partnership with Mylan had a certain number of programs, including trastuzumab, and obviously we are talking about next generation biosimilars with Sandoz, which really are about the next wave of biosimilars that will come off after patent expiry beyond 2025. So I think that's what we're looking at.
Well, ma'am, let's keep it very simple. What is the revenue share of this particular tie-up?
I don't think I can give you real details of this whole arrangement, but suffice to say that there is a cost share and a profit share which we have agreed to, which is equally going to be, shared.
Okay, fair point there, ma'am. But in that case, if we could give us some more details about what kind of biosimilars will you be applying for, some details on the products?
I can't really disclose the actual names of the biosimilars that we're developing, but as you know, biosimilars really are in the immunology and oncology space, and I think most of these are in that kind of realm, and that's what we will be developing.
Okay, ma'am, for that development, if you could give us a sense of what is the investment that will be required?
I can't even give you exact numbers because, but I can sort of give you a ballpark that it costs anything north of $100 million a piece to develop. And that's what it will take.
All right then, ma'am, if you could qualitatively tell us the kind of investment that you will be making, will there be any impact on your balance sheet, or will future cash flows from this partnership be able to suffice for the investments that you're going to make?
Well, I would say that, look, these are cost and profit share models. And I think what we need to do is to look at what is required to invest in making the commercialization a big success. So both partners will look at making investments which actually make sure that we, optimize the success in the marketplace.
If you could help us out, ma'am, what does this mean for Biocon's biosimilar program? Where does Biocon see itself 5 years from now when it comes to biosimilars?
Well, I think this is, we see ourselves as being very, significant in the biosimilars opportunity in the foreseeable future. And we are basically doing, entering into these kind of partnerships to make sure that we are very significant. As you know, Sandoz is perhaps one of the leading companies when it comes to biosimilar approvals. And, Mylan and Biocon also have been very successful in getting their trastuzumab approved. And we expect others also to be approved in the near future. So I think, we are trying to make sure that, we basically combine our forces, companies who are very successful in biosimilars. And, it's a combined success of both these partnerships.
All right, ma'am, that's as far as your partnership with Sandoz is concerned. But since we have you with us, if you could give us an update of what's happening with regards to the European regulators re-inspecting your Bangalore plant. Remediation is complete. Have you re-invited them?
We are ready for a re-inspection, and they will be re-inspecting us, in the near future. And we are hopeful and confident that we will pass this inspection.
All right. Thanks a lot, ma'am, joining us and giving us all those details. Friday, and we can't not talk about spirits stocks. United Spirits, it has moved to the high point of the day. As we speak, there you have it, saying cheers to everyone. But we're here having a green tea. Let's move on. We have HPCL management optimistic on the deal with ONGC getting completed in this fiscal. That was the important takeaway that we had from the management's commentary that came in this morning to CNBC TV18. Hear him out.
The widespread expectation is that the HPCL deal will get done. I mean, the one with ONGC. Any thoughts at all that it's happening this month?
No, the timeline has to be decided by the government, but I think the process is on.
This FY, before March 31st?
I think so.
Right.
I think so. But that is for the government to decide.
Of course.
But I think the process is on.
Okay. Underperformance has become a mid-cap outperformance, in fact, as we speak. Couple of stocks that are moving around in the last few minutes. KRBL, just take a look at the intraday chart over there. That stock has spiked up. Godavari Power and Ispat, that's the other stock that I'm looking at. Remember, it comes out with its set of numbers tomorrow. It's already had a big run, but Godavari Power and Ispat, early morning, it was at lower circuit with quite a few sell orders. Now, in fact, all those sell orders have been picked up. And remember, the numbers will be good. That's something that the street has been pricing in. I think on a quarter-on-quarter basis, the stock is more than doubled. Couple of other stocks, JNA Axles, that comes out with its set of numbers. That stock as well is moving higher. Remember the management telling us on this show itself, the numbers should look good in terms of a top-line growth. So that stock as well is moving higher. And JSW Steel, that was trading in the red. That's done a quick U-turn, so that's trading in the green as well. Mangalam, as Mangalam was mentioning earlier, United Spirits, it indicates Mangalam's intentions for this weekend, I think so. So cheers all the way, it seems.
My intentions are indicated by Tata Global Beverages. There is coffee. That stock too has moved to the high point of the day. But no one's taking medicine. Sun Pharma at the low point. With that, we'll wrap up on Chartbusters. But you stay tuned to CNBC TV18